A scenario that can undermine Westpac would be the introduction of a super app in New Zealand. A super app will leverage decreasing trust and growing dissatisfaction in traditional banking to build market share quickly.
What is a super app? A super app is an application that allows you to access several services from just one place.
Money interaction has drastically changed and evolved over the years, embracing customer trends from moving from cash to digital channels such as contactless payments. The emergence and evolution of super apps such as WeChat, Venmo, Cash App or even Alipay has sparked a shift away from traditional banks.
A survey of US customers highlights that 46% of them use fintech-based super apps for their banking activities. We also know that New Zealand commonly follows trends from the US. This can be observed with investing apps such as Robinhood, which inspired local startups Sharesies and Hatch. Super apps are disintermediating banks from their customers, removing their access to data-generating activities that shape the way they develop.
A quote from Hugh Fletcher, a director at Wonderman Thompson: "If you own the interface, you own the customer. If you own the customer, you own the data. And if you own the data, you can define the future."
Based on a survey conducted this year, 48% of Westpac's customers are dissatisfied with their services. This dissatisfaction is leaving Westpac vulnerable to the shifting customer trends of spending and investment through apps like Sharesies and Hatch. Currently, Westpac's best term deposit rate is 3.7% per annum over 5 years. As of the 31st of March 2022, using a Smart Shares managed fund garners an annual interest rate of 11.24% over 5 years. On top of this, dividends are paid per share of smart funds. These returns seen by customers are driving them away from traditional banks, and in the future, this could lead to depletion in capital available for loans as customers would have decreased amounts in their savings account due to the increase in super app adoption.
We recommend that Westpac develop their own super app to compete with international brands before they become mainstream in New Zealand. However, we are aware that research and development costs are high and it can take months or even years to develop a working prototype. Therefore, we recommend a partnership model that has lower costs, lower risk and provide a better user experience.
Our recommendation would be for Westpac to partner with Sharesies. By doing so, they can implement already existing technology from the Sharesies app into the Westpac app. This would give Westpac users the ability to trade shares, but also manage stock portfolios, follow various trends in the stock market, or invest in designated funds designed by Sharesies or Westpac teams, allowing for easy exchanges with the opportunities for hassle-free withdrawals.
We believe that Sharesies is the key because it is an already existing platform with share trading that already has an active customer base. By partnering together, both companies will be able to expand and reach more potential customers. Sharesies would not have to face the competition of Westpac launching their own stock exchange feature in their super app. This partnership will enable Sharesies to gain a foothold in the Australian market by taking advantage of Westpac's established customer base. As Sharesies is 15% owned by TradeMe, we can see this advantageous as TradeMe has had previous strategic working relationships with Westpac, meaning that they could leverage the existing network. Sharesies would be inclined to work with Westpac over other banks in New Zealand.
Why this is important, you may ask? Well, 2020 saw the rise of the retail investor. It's become evident that the days when investing was considered a taboo topic reserved for the wealthy are no longer.
By integrating technology from Sharesies into Westpac, you have the ability to provide existing customers with a safe space to buy and sell shares. However, some customers want set and forget investing, which is where Sugar Wallet can be integrated. Sugar Wallet, partially owned by Westpac, offers a modern take on the KiwiSaver, with set and forget investing payday to payday.
You can entice customers to join Westpac through zero-fee trading and instant withdrawals. That is complemented by the integration of Buck, which is partly owned by Westpac. This enables easy peer-to-peer payments of cash and stocks with future expansion into cryptocurrency.
Westpac could further develop this super app by utilising technology such as Bud, which is another fintech company that focuses on using data analytics from prospective borrowers' bank statements to streamline the lending process. ANZ has tested this and Westpac should follow suit. By developing a super app using Bud's API, Westpac would be able to leverage data to have loan applications approved within minutes through AI-accelerated risk assessments.
Westpac would now have the super app, with features that include the capabilities of a bank, such as day-to-day transactions with efficient loan processing. The abilities of an exchange platform, one that offers peer-to-peer payments, will transform customer satisfaction rates. A super app is a customer-centric application which combines multiple apps into one simple platform. This can create high engagement and provide a greater customer experience, as downloading multiple applications can become a hassle and burden, which in turn creates a disconnect of interest from the consumer.
Our solution will help Westpac to strengthen their market position through first mover advantage. Once these super app incumbents reach our shores, Westpac will be less susceptible to their disruption in comparison to other financial institutes. Not only this, but Westpac will provide customers with a service they haven't even dreamt of yet.